Charlie Munger raves about Warren Buffett's rare Japanese investment opportunity of a century. It was like having God just opening a chest and just pouring money into it. High rewards for a low risk. Benzinga. Warren Buffett's unexpected decision to invest in Japan during the 2020 pandemic seems to have paid off, and no one appears more pleased than Berkshire Hathaway Inc. Vice Chairman Charlie Munger. The strategy was a departure from the company's well-known preference for American enterprises like Apple Inc., the Coca-Cola Company, Bank of America Corp., and American Express Co. The company's portfolio has often been a testament to its confidence in the U.S. Speaking on the acquired podcast in O. Below are your comments. It's remarkable how some investments can be such game changers. Honestly, I feel like I'm always late to the party with these opportunities. That's why I've always relied on expert guidance. I've been with a coach for a while now, and even though I'm not always updated with the market, I've seen so. Not everyone can do it, and also selection of companies are crucial. It was no easy stuff, Mr. Munger. Been humble. Equities could lose all their value and things can go wrong like Buffett in U.S. He made it so simple, saying borrowing at 0.5% and investing in securities with 5% yield. Not so simple, but why is this garbage site Benzinga suddenly posting daily information, old information, about Buffett and Munger? Other than promoting investments they never would, as part of the article? According to data from various sources, including art market research, fine art has outperformed the S&P 50. Why does he keep chasing money? Is it ever enough? Next news. Nuclear power is the future, and these stocks are leading the charge. Tip ranks. The world runs on energy. Just think about how much of your life depends on the little outlets in the walls. For now, the bulk of our power generation capacity is supported by fossil fuels, mostly coal and natural gas, that are pulled out of the ground. Long-term, however, the social and political pressures on fossil fuels are reducing their use, and will reduce it further. Despite huge subsidies, wind and solar power simply cannot replace the lost capacity, and we will have to find it somewhere. Below are your comments. A vast expansion of nuclear power is the only workable and credible path to reducing carbon emissions. Wind and solar are like unicorn poop and pixie dust. They are unreliable, intermittent, and we've yet to figure out how to store energy from renewables on the utility scale in an efficient or Who wants a radioactive waste site in their backyard? The waste will still be radioactive long after the human race is extinct. That doesn't even begin to deal with a natural disaster or human error impacting the power plant itself. Japan is still dealing with their nuclear plant problem and dumping This is not about carbon emission as much as major deposits of oil, gas are held by Russia, Saudi Arabia, Iran, Iraq, Venezuela, etc. They are adversarial nations to Western world. Energy is the engine of the world, and this commodity may be used in the near future in dire ways. If climate change is a of the 99 gigawatts GW of total operating nuclear capacity in the country, 95 gigawatts came online between 1970 and 1990. Next news. Housing market affordability is so bad that Zillow says it will take you 13.5 years to break even on a purchase from July onward. Fortune. This crucial milestone that signifies financial stability will be lost on new homeowners for more than a decade. Below are your comments. It's very sad how quickly the housing market has changed. Just 3 or 4 short years ago, a family could buy a nice house for around $200,000 in most USC ties at a very affordable interest rate. Folks who took advantage of that time are now sitting pretty nicely with affordable mortgages. If you buy a house to sell for a profit, that may be true, but I bought mine to live in and have been in it for over 20 years. I still cringe when I hear personal residences referred to as an investment. Investments has 3 criteria. 1. Anticipated appreciation. 2. Low carrying costs. 3. Generates its own revenue. The house you live in only satisfies the first one. Taxes, upkeep, insurance, etc. are high carrying costs. It.d. What one has to really do is look at the money spent on renting versus home ownership over 13.5 years. One builds equity, and the other builds profits for the landlord. And for families, 2-bedroom apartments are becoming rare. Looking at a home only from a profit standpoint is missing the big. I'm in the LA area, and know plenty of people who make more than 6 figures. They complain about the cost of buying a property, but then again they love to spend on luxury cars, expensive car, pricey coffee, etc. My wages are far less, but I managed to save, and now I have 3 rental properties. Next news. Ask an advisor. My kids inherited $5 million. How should they handle it? Smart asset. My children have inherited $5 million of stock from their father, whose estate has not yet been dispersed after 11 months, leaving them with a 30% or so loss of value over which they have had no control. Is there? Continue reading. Right pointing arrow. The post. Ask an advisor. My kids inherited $5 million. How should they handle it? Appeared first on Smart Asset blog. Below are your comments. The question implies that retirement accounts are involved. These should have had payable on death beneficiaries and been settled right after death certificates were issued. My father-in-law signed TODs on all his brokerage accounts and bank accounts. Todd as transfer on death. There were only 2 beneficiaries assigned to the Todd accounts. 50% to each beneficiary. When he passed, we sent COD's certificate of death to all those accounts and they split them up 50/5. 0. Disp. Father held shares for decades through thick and thin. Beneficiary sees 1 double-digital loss on AS. Tepped up cost basis and hastily panic sells. Actually, the stocks held in the taxable account would have their basis reset to the father's date of death. Even if purchased long ago, the cost basis would reflect a more recent value. My dad left me some old silver Morgan dollars and Mercury dimes when he passed. Should I sell them? How do I manage the $14 or so in taxes I will incur? Help me, Yahoo! I can't make adult decisions and think for myself. Next news. Realtors must pay home sellers $1.8 billion for inflating commissions. CBS MoneyWatch. The National Association of Realtors and other industry players conspired to boost the commissions paid to real estate agents. Jury rules. Below are your comments. If I wanted to sell my house, it would cost me $34,000 in realtor fees. Does that sound reasonable for someone to do paperwork? Listed on Zillow or another site. It's cheaper and easier to sell by owner and have the title company do the paperwork for a fraction of the cost of a realtor. It is the percent concept that is wrong with this. It should be a dollar amount that is agreed upon, whatever that is. I doubt it really takes that much more work. Paperwork. To sell a $600,000 house versus a $200,000 house, so why does it cost 3x as much in commission? Lawyer fees are the next thing that needs to be addressed in a class action suit or through legislation. Most people are told by the real estate agent what their commission fees are. I sold a home in CAA during the peak before the bust in 2008-2009 and I told the agent that homes sell for one day and if she wants the listing she'll get 1.5% and the buyer the same. She took it in a heartbeat and the hoe. In the old days, re-agents would have more expenses. Newspapers ads, mailers designed, printed and mailed, numerous signs and other marketing expenses. These days it's pretty much just put it online and wait for the phone to ring. Next news. Sailor's MicroStrategy posts loss after writing down Bitcoin holdings. Bloomberg. MicroStrategy Inc., the enterprise software maker that is the largest publicly traded holder of Bitcoin, posted a third-quarter loss after taking a write-down because of a decline in the value of THE cryptocurrency. Most read from Bloomberg. Immigrants are leaving Canada at faster pace, study shows. Israel latest. Biden urges pause so hostages can leave Gaza. Real estate industry takes fresh hit with verdict on emissions. Fed signals yield rise reduces need to hike, but door still open. Below are your comments. So the article will just ignore the giant unrealized gain? Mark-to-market 5.5 B, which is at least a couple billion over the so-called reported loss. Oh, by the way, GASP reporting rules are changing. That loss that was written down even though market value is in gain territory can now be marketed. Those are the reporting rules that make no sense. I won't even get into it. It's a long one. When the voters oust the bank puppet Democrats from the throne next year, then BTC will be trading over 120k. Plus new fair accounting rules for crypto holdings will show the true value of MSTR. Lol, he lost nearly one half of the money so far, and he is in charge? The guy has no clue, and to keep him in charge is seriously wrong. Next news. Toyota hikes wage of U.S. factory workers after UAW labor deals. Reuters. Toyota Motor said on Wednesday it is raising the wages of non-union U.S. factory workers just days after the United Auto Workers Union won major pay and benefit hikes from T. Detroit 3 automakers. Hourly manufacturing workers at top pay will receive a wage hike of about 9% effective on Jan. 1, the company confirmed. Other non-union logistics and service parts employees are getting wage hikes. Below are your comments. Thank you, unions. The only reason Toyota is raising wages is because of this contract. If there were no unions, all these people would be paid minimum wage. So the Toyota workers are benefiting because of the heavy lifting from the UAW workers' contract. The unions have made it so that you won't be able to buy a car, just like the $18 Big Mac, and hence, there will be no jobs. Good luck. Keep your car, eat at home. Not so fast. It'll be interesting to see just how productive the UAW workforce will become 6 months to a year after the signing of the new contract. I'm not holding my breath. The difference is that Toyota can use their high wages to attract extraordinary workers. The UAW places have just any random person and pay that much, along with expensive and often wasteful extra benefits. Next news. Billionaire investor Stanley Druckenmiller is taking massive leveraged positions on safer assets Han stocks after getting really nervous about the economy. Fortune. Stan Druckenmiller says a long-held belief that the stock market will always go up in the long term may no longer be the case. Below are your comments. I'd say given this high volatility, wouldn't it be prudent to create a portfolio based on someone else's successful model? I've achieved a remarkable 21%, $130,000 return in just 5 months without entrusting my funds to anyone for management. Sometimes, it's less about predicting the market's moves. Nothing wrong with cutting people's Social Security by $100 per month and increase Medicare copay by $20. So that politicians can send another $100 billion to Ukraine, $20 billion to Israel, and $10 billion on to Taiwan. The math works out just fine. Lol. Terrible idea. The government is trying to keep liquidity in the equity markets economy with ultra low interest rates, and this guy is saying to take that money that the government just injected into the economy and use it to refinance government debt. So basically they are siphoning off all time reveals truth. The next 24 months will help clear the fog of illusion in the markets. Next news. Charles Schwab lays off 5% to 6% of total headcount. Reuters. These were hard but necessary steps to ensure Schwab remains highly competitive, the spokesperson saw it in an emailed statement. Banking heavyweights including Goldman Sachs and Morgan Stanley have joined the rest of corporate America in cutting jobs and costs to better position themselves for a murky economic climate. In August, Charles Schwab disclosed plans to save $500 million by cost-saving measures and said at time it would cut jobs, without disclosing the number of employees it was going to lay off. Below are your comments. Looking at their web platform and the app, I can see why. My account was with TD Ameritrade and their interface was pretty decent. But once it was bought by Schwab, the experience is horrible. Their site and the app looks like Craigslist that was made in the 80s. I am literally transferring all my never had a problem with Schwab, and have been with them for many years. TD plus Schwab merger equals duplicate jobs equals layoffs. TD Ameritrade was excellent. They haven't changed me over yet, and from what I hear, I'm not looking forward to it. I wonder how many are from TD Ameritrade. Next news. U.S. set to draw record amount from emergency oil reserve. Investopedia. Oil prices plunged after word spread that the U.S. government plans to draw a record amount of oil from its emergency supplies. Below are your comments. This administration is a joke. They have already depleted the strategic reserves to record lows because they want to artificially lower gas prices instead of drilling for more oil. The Biden administration has continued to try to destroy the oil industry, which is something Joe Biden actively campaigns. Why? Just why? Any answers other than vote buying? Loan forgiveness was a bust. Now this. Oh, I almost forgot, spending money you ain't got and paying lots of interest on that debt. Someone pointed out while everyone was refinancing their mortgages at low rates, our own Janice Yellen was sleeping. Why are we doing this? High prices caused by bad policy is not a strategic threat that warrants depleting this resource. Pandering for votes. The Biden administration is putting our security at risk. It's called strategic reserve for a reason. There's nothing strategic about flooding the market with U.S. taxpayer-subsidized oil. Next news. Nvidia stock rebounds after AI chip export woes. Is it a buy? Investors Business Daily. Nvidia, a giant in data centers and gaming, is supercharging investor interest in artificial intelligence. Is Nvidia stock a buy amid AI chip export woes? Nvidia leads in artificial intelligence AI chips, but competition is rising. Below are your comments. I bought this stock back in 2008. My split adjusted cost is about $4.68. I will probably never sell, and hopefully my kids can take advantage of the step up in basis if it's still around when I take the dirt nap. Bought it before the stock split and it was great, and then crashed in 2022. As it tanked, I bought a lot more and now it's exploded again. So far I've done great, but it's been a wild ride. Tech stocks are extremely overvalued, except perhaps a few like Qualcomm and Cisco. It makes no sense why many are up 50 to 100% in a few months while finance stocks have tumbled. The analysis is focused on the short term, despite the fact the NVDA's earnings are expected to begin to grow significantly long term as more AI operations go into effect. Next news. The S&P 500 could soar 16% in the next year as a buy signal with strong track record close to Florida's. Hing, Bank of America says. Business Insider. Historically, when the indicator has been here or lower, 12 meters forward S&P 500 returns were positive 9.5% of the time, B of A analysts wrote. Below are your comments. The only thing soaring is the national debt and interest payments. We are spending $3 billion a day, but let's ignore it and celebrate Apple's new iPhone coming out. Wink wink. You mean Bank of America, who said at the beginning of the year that the stock market was going to Dr. Up 20% before it rose 18% by late July, is now saying that the market will rise 16% next year. Sure, I will believe their analyst's latest predication, sarcasm. Joe wants a huge recession to control inflation and real estate crashing so his promise of affordable e-housing can be achieved. Article hour ago said big crash coming. Ya www.nnn. 43 months and I'm still waiting for that recession. 18 months and no bull market either. No matter, I'm raking in the dough after investing in de-dollarized BRICS bucks. Lol. Next news. IRS raises 401k contribution limit to $23,000. Investopedia. Retirement plan contribution limits are among several values that the agency, by law, has to adjust every year to account for changes in the cost of living, so you can thank inflation for the increase. Below are your comments. If the government were serious about our retirements and Social Security being stolen from, they would not impose any limits on any employees for any reasons. When 401ks first appeared, a person could invest $45,000 and that dwindled to $7,000 after a few years. Why an entity that does nothing but? How about increasing contribution limit in an IRA? How many workers have anywhere near that much income to contribute after current living expenses? 2.2% increase in double to quadruple that in inflation rates. I don't want to put my money in there. I am done giving them money to manipulate the market. When these financial institutions don't have the money, they can't move the stock price to generate FUD. Next news. Vanguard takes final step to exit China, dismantling last team. Bloomberg. Vanguard Group Inc. is taking its last steps to exit China and shut down its office in the 29 trillion yuan, $4 trillion mutual fund market. Most read from Bloomberg immigrants are leaving Canada at faster pace, study shows. Israel latest. Biden urges pause so hostages can leave Gaza. Real estate industry takes fresh hit with verdict on C. Emissions. Fed signals yield rise reduces need to hike, but door still open. Powell hints Fed is done. ITH hikes in pivot cheered by markets. Vanguard Ha. Below are your comments. China communist build their economy based on the house of cards. It will bust soon. Thank God. I'm a Vanguard customer and this makes me feel much better. Only Xi is making any money in China. Xi and Putin are bleep China's golden goose. Lesson learned in Russia. Please subscribe to my channel. And if you like it, please thumbs up.